Do you worry that a flattening yield curve will actually end up inverting? And does that mean economic catastrophe?
Thank you very much for having me. One of my favorite subjects here. So flattening yield curve, really don't think that's a threat at this point. It's not uncommon to see yield curves flatten later in an economic cycle when the central bank is lifting short-term interest rates, especially if they're more than halfway through their rate hiking exercise. So it's actually quite normal behavior. What we have to worry about, which you touched on, is if the Fed continues to tighten in a way that actually inverts the yield curve. Impossible to know if that will be the case, but what's happening with this flattening is many analysts are just projecting out a continuation of the flattening trend, and then eventually you end up in an inversion. When that's happened, at least in the U.S., you've typically had a recession within about a 12 to 24 month period. But if that's where we're headed, it's a ways off. So I wouldn't be overly concerned about it now, but it is, the ultimate question in terms of business cycle risks.
What's the probability that they make a mistake like that, that they actually invert the yield curve and we have the kind of spillover effects that you're talking about? Because, I mean, as far as alarm bells go, they're ringing so loudly about the prospect of this. Surely the Fed's not going to to that extent.
Unfortunately, if you look at the track record, that's typically how these business cycles end. The Fed tightens enough to kill the business cycle, and that in the U.S. has always been presaged, at least since the mid-50s.
Go back to the 90s, and we had a flat yield curve for a long time. Arguably, the Fed created there the perfect soft landing. Why can't we do that, given all the sensitivities we have today?
So if you look at, say, 1994, 95, or 1998, the yield curve got very, very flat. Some measures inverted, but the one I like to focus on is the 10-year to 1-year Treasury spread. That has the best track record of inverting ahead of recessions without false signals. Got very flat in 1995, but didn't invert, reversed course. Same thing in 1998. So sure, it's possible that the Fed could continue hiking, the curve continues to flatten, but they ultimately call off the tightening exercise before they invert the curve and run the economy into a recessionary ditch.